I'm going to share with you guys a stat that shows Tuesday, the stock market has a 57.1% chance of doing this one thing at a time when we see this has a potential hanging man candle. Is this going to be bullish for the market, or are the bears going to come out, confirm their hanging man pattern? Then we're going to go down, basically setting up a double top trading pattern. And all of this is taking place at a time when the yield curve is about to uninvert. Now, before we go ahead and get too bearish on the market, I want to share with you guys a bullish stat real quick. And this is basically showing us the last 23 times this has occurred. And that is when June, July, and August are up 5% or more. We're going to look at what normally happens for the next 4 months. Now, if we look at September, we know historically September, especially on the back end, tends to be a little bit more bearish. And we can actually see that even with that stat, that out of 23 times, we have been up 13 of the Septembers, only down 10. However, October does not fare as good, where we have only been up 6 out of the 23 times and down 17 times. However, when we look at November and December, very bullish months, where November has been up 17 out of the 23 times and December has been up 20 out of 23 times. Now, let's talk about Warren Buffett for a minute. Is this why Warren Buffett dumped billions worth of Bank of America stock? You might say, Mike, why is that relevant? Well, let's look at the XLF. The XLF has been on a tear. It has been breaking out. We had this consolidation break, came back into the range, and now ripping up 1, 2, 3, 4, going up and up and up. And we come over and look at the 1 week performance. Financials were leading the way. When we look at the 1 month performance, we also see financials were leading the way. So for the month of August, financials outstripping everything else, and Warren Buffett essentially selling Bank of America. But when we look at the XLF versus now taking a look at Bank of America, notice Bank of America is not breaking out of recent highs like we saw with the XLF. We look at JP Morgan. JP Morgan is fall right in line with the XLF. We take a look at Goldman Sachs. It's very close near recent highs. Even the KRE looks like it could be poised to set up a larger ABC pattern on the way up. If we actually draw this out for KRE real quick on the weekly chart, A to B equals C to D, that would give us a price completion all the way up here at 64.26. So why in the world would Buffett sell when we see financials still on the move back up? And if we look right here, it says Buffett's stock dump could be driven by looming recession threats and the Federal Reserve interest rate cutting cycle, which would begin as early as mid-September and dent banks' interest earnings. Now, if we come over here and we look, this is going to be very important, right? We look at the Fed watch tool. They are expected to cut rates. There's a 70% chance the Fed will be cutting rates come September. And when we look, that is essentially only 17 days away from the time of recording this video. But wait, there could be more reasons why Warren Buffett is also deciding to sell Bank of America. Perhaps the 94-year-old billionaire has increased his cash reserves to record levels because of elevated stock valuations amid the artificial intelligence bubble. And we all know Warren Buffett has been piling cash. Why is that? Because he's a value investor and he knows stocks are overvalued at this time. Now, the media and the Fed keeps wanting to sell us on this narrative of a soft landing. However, Big Lots reportedly mulls bankruptcy amid consumer downturn. Now, when we look at a chart of Big Lots on the weekly chart, we can see back in 2021, it was trading roughly around $73 per share. As of Friday, only trading at 54 cents, trading on pennies on the dollar. Now, do you guys think Big Lots is going to be able to survive bankruptcy, or is Big Lots going to fail to exist in the future? Now, last week, we also saw the Fear and Greed Index get back over into greedy territory. Are we about to see the Fear and Greed Index swing all the way over to extreme greed, or are we going to see the bears step back in and sling it right back down? If we look right here, PCE inflation in July report shows Fed rate cut path on track. However, if we look at this article right here, Fed's favorite inflation indicator unexpectedly misses as savings rate plunges to near record lows. Now, this is going to be a problem, and the reason why I'm saying this could be a problem, as we scroll down and look at this graph, look at the personal savings rate. The last time we're at this level was 2022. However, prior to that was going all the way back to the great financial crisis back in 2008. Now, when we come over and look at a chart of the Dow, last week, we saw the Dow making new all-time highs. Now, it's either a case of making a new all-time high intraday and then close a little bit lower, or like we saw on Thursday and Friday, also having closing new all-time highs in this market. However, when we come over, we look at small caps back on the rise again, could be setting up for another move up towards the recent highs in the market. MACD indicator is a little bit weak, but will the Dow continue to push the new all-time highs? Can the SPY push the new all-time highs? Will the QQQs make another run, breaking out of this potential bull flag pattern all the way back up to these highs? Because when we look at this stat right here, this stat basically shows the first 10 days and the last 10 days of each month. And we can see September, for the most part, is red, both for the first 10 days and for the last 10 days of the month. Now, this is going all the way back to 1928. So we got to ask ourselves, if weakness is going to come into the market, is the market about to do a look above failure and start coming back down? Or do we just need to simply throw this stat out of the water and not even worry about it? The second half of September tends to be bearish for the market, but who knows? Maybe this time is different. Everybody keeps saying this time is different. Soft landing. J Powell is going to navigate this perfectly. Now I want to make everybody aware, Apex having an 80% sale off all their valuation accounts, $35 reset fees, passed in as little as 1 day, and they've extended $85 lifetime activation fee on all accounts. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, when we come over and look at this stat real quick, this basically shows us Tuesday, all right? Monday is going to be a holiday. However, I do plan to stream a little bit in the morning as the futures markets will be open for half a day. But I want you guys to pay very close to this stat. If we look at the Dow Jones and the S&P 500 for Tuesday, the day after Labor Day, we can see that both of them are only up 42.9% of the time. We look at the NASDAQ, it fares slightly better where it's up 57.1% of the time, and the Russell 2000 is only up 52.4% of the time. So yes, that's where I got that 57.1% stat by basically saying that there's a 57.1% chance that the Dow and S&P 500 is going to have a down day on Tuesday. However, when we look at Wednesday, the Dow Jones actually has a 66.7% chance of being up, but the S&P still cannot crack the 50% where it's only up 47.6% of the time. However, the NASDAQ is up 52.4% and the small caps are up 57.1% of the time. Then as we look at the SPY, we've had this consolidation. We are now back up towards the upper end of this consolidation. Are we going to see the SPY flip back down into this range and then ultimately break back up, or even come low enough, set a trap, and essentially get all the shorts to jump on board and then go ahead and rip back up to the moon and make a run to new all-time highs? Now, next week is going to be a big week in terms of news. We look at Monday, it ends up being a US bank holiday. However, we come over and look at on Tuesday, we have ISM manufacturing PMI, ISM manufacturing prices. Then we look at Wednesday, we get the JOLTS job openings. Then on Thursday, we get the ADP non-farm employment change, followed by the weekly unemployment claims, 9:45 final services PMI, 10 a.m. ISM services PMI. Then on Friday, it's going to be a doozer. We have the non-farm employment change. We have the average hourly earnings. We have the unemployment rate, and we also have FOMC member William will be speaking. So now I want to come over and look at bonds. As we know, the Fed is likely going to be on a rate cutting cycle. We can see bonds now, the TLT has dropped below the 20 period moving average. Are we getting ready to come all the way back down to the 50 period moving average? If that's going to be the case, then we're likely going to see the dollar index continue to rally back up. The dollar index is trying to make its way back up towards the 20 period moving average. But then when we look at this from a basic structure standpoint, we have candle wick right over here to the candle body. I want to see what happens if and when the dollar index gets towards that area. Will the dollar index essentially flip and go right back down? Or are we going to see the dollar index continue to gain strength? Now, if the dollar index continues to rally up, then our friend gold out here may suffer a little bit more of a pullback. Now, on Wednesday, we had that inside candle. Then on Friday, we've seen the markets trading a little bit lower. Now, normally we have an inside day, we get a breakout or breakdown from that pattern. And now we've seen gold starting to break down. The MACD indicator is starting to roll over. However, we still have this ABC pattern up here at about 2,586.8. That level has not been hit yet. And if you look, we still have a series of higher lows, low, higher low, higher low, and question mark, are we going to come down below this low? Then at that point, set a stage where we end up starting to set a lower high and a lower low, which would indicate likely going to get a deeper retracement. So we need to keep an eye on gold out here this week. We come over and look at crude oil. Crude oil suffered a down day on Friday, and a lot of that had to do with OPEC is probably going to go ahead and expand production. And OPEC is going to go ahead and raise output. Now, we have a demand issue with crude oil, and OPEC is going to be raising. Why is that? They want to get as much supply into the market while the market can still handle it before the global recession hits. Now, when we come over and look at the volatility index, we saw it's down once again on Friday, down another 4% on the session. And the 52-week lows are all the way down here at $10.54. That's about 4.5 points lower. Are we going to see the VIX continue to dwindle lower? Keep in mind, a lower VIX, most dips tend to be bought. Also, though, we got to be on the lookout for when we get extremely low on the VIX. That's exactly when an unexpected volatility spike will creep in. Now, last week, NVIDIA had earnings come out, and to be honest with you, the earnings weren't that great. However, the stock did come down, but then on Friday, we actually get an inside candle. Now, which way is NVIDIA going to break? What I will say is if NVIDIA would have had a positive reaction to their earnings coming out, the S&P 500 would already be at all-time highs, and we would already see the cues breaking out of this bull flag pattern. Now, in case you guys are wondering what I'm talking about, here would be the flagpole. Then we go ahead and draw the flag, and you can see we're right there pressing on the area where we can see the cues getting ready to break up and out. Now, we come over and look at the QQQs on a monthly chart as the month is now over with. MACD indicator still looks extremely strong. However, we get a hanging man candle up at this area. Now, the hanging man candle is the weakest of all reversal patterns. In order for this to be a bearish reversal pattern, we must get below the low of the candle. One thing to note though, even though this is an uptrend in the market, they slammed it down earlier in the month only to rip it right back up. So you got to give the bulls some credit that they were able to bring it all the way back up. So be on the lookout. Do we break above the monthly candle? If so, we're probably going to see the NASDAQ making a run to all-time highs. We look out here on the weekly, and this is where it gets a little bit dicey. On the weekly, we also have a little bit of a hanging man candle, but this could also be a case where we actually set up a lower high. Do we essentially come back down towards the swing low over here and basically set up a consolidation up and around this area? If we start breaking below this swing low at about 423.81, then that could set the stage for a potential A to B equals C to D pattern on the way down. That would give us a price completion down here about 405.79. And to be honest with you, that wouldn't be bad. If that's all the weakness that we see going into September, then by the stats I showed you guys earlier, because then we got to be ready for November, December when the stock market goes ripping right back up. We come over here and we look on the daily chart real quick. This week, it's all going to be about, do we break out of that bull flag pattern? And if so, once we start to break, I want to watch the recent high over here. If we can get above that high, then I want to look right over here on the composite profile. Notice this is an area where we've had high volume, which comes in about 496.30. We look all the way over to the left, and that also correlates very well with this gap over here coming back and being filled in the markets. Now, when we come over and look at the futures markets, we had some amazing calls last week on the live stream, but we complete our ABC pattern on the way down. Now, one of the patterns that we were talking about in Friday's New York session live stream was the fact that we could be setting up an A to B equals C to D pattern on the way up. And this is what I actually said I think is likely trying to occur. That would be A to B equals C to D. That gives us a price completion slightly above that previous weekly point of control at 19,848.75. That is an untested point of control. It has not come back and tested that level yet. And we would be right above that, about 19,885. Now, when we look at the weekly volume profile levels, you can see we are closing right within the middle of value. Value area high coming in at 19,685.00. The point of control down here at 19,601.00. Value area low will come in at 19,459.50. Now, if we can break above value area high, that would give me even more confidence we're likely going to push up towards that point of control and even complete the ABC pattern to the upside. Anything above the ABC pattern, then I'd look for the retest of this high over here at about 20,022. However, once we complete the ABC pattern, do not be surprised if the market does something other than continue up. It can be an upper level consolidation. It can be a slight pullback and then go ahead and resume the move on the way back up. As we come over and look at the daily profiles, notice we closed above value area high, which comes in at a price point of 19,558.75. The point of control is going to come in at 19,467.75. Value area low coming at 19,421.75. Now, I also want you guys to pay very close attention. We have a minus development area through this area. We can see where the volume profile has very little volume traded at it. We can tell by the valley within the profile. Now, when we look at this, that area is going to be anywhere from 19,507 to about 19,493. Now, what I want to look for is if we start breaking below value area high, then I want to look to target this minus development area. One, it should act as a magnet, but two, we want to look for possible reversal signs out of this on a smaller time frame chart. If you trade the 1 minute, 5 minute, wherever the case may be, if we come into the zone, I'd want to look for a retracement on the way back up and see if we can go ahead and resume that ABC pattern that I shared with you guys on the 4-hour and weekly volume profile charts. Now, also take note that since we closed outside of value area high, then it's highly probable that either Tuesday or Wednesday, we're going to come back and test that level, and maybe as early as Monday. But with Monday being a holiday, I don't know how much I actually want to count that as one of the 2 days, but by Wednesday, we should come back and test that price point. Now, as we come over, look at this SPY on the monthly chart, a nasty hammer candle and an uptrend. Is this going to be more rocket fuel to go ahead and push the market higher? In the beginning of the month, what do? We saw it. We saw the bears stepping in, pushing the market lower, only to close higher than when we actually opened for the month. So you got to actually give that to the bulls at the moment. We look at the MACD indicator on the monthly chart, it still looks extremely bullish. Then out here on the weekly chart, we see we have MACD divergence with another hanging man candle. Now, a lot of people are saying, what about the double top? This has to be a double top. In order for this to be a double top, we must break below the swing point right down here at 510.27. If we never come down below that area, then it's not a double top pattern. Now, maybe we do a look above and then we just kind of chop back in this area. That still does not change anything. Long as the market doesn't get destroyed between September and October, we could see one heck of a rally to new all-time highs. Will the SPY be able to make it to 600 by the end of the year? We come over and we look at the SPY on the daily. We can see this consolidation we've had. We've been able to break above it. Now, are we going to be able to hold above that price point, or are we simply going to come right back into range? Now, something else I will be looking for on Tuesday, do we see a little bit of weakness back into the range only to go right back up? Keep in mind, we are not that far away from all-time highs. We come over and look out here on the weekly profiles. Notice what we've done. 2 weeks back to back, basically stuck in the same area, and we're really having a hard time holding above this high volume area. We get it like slightly above it, boom, smack right back down. But it's looking more and more evident that we have that ABC pattern to the upside. A to B equals C to D gives us a price completion up here about 56.97. Now, that is not enough to get the futures to new all-time highs. Now, when we look at the weekly volume profile levels, value area high is going to be 56.51.50. Notice we are closing above that price point. The point of control is going to be 56.38.00. Value area low will be 56.12.00. Now, since we closed outside of value, it's highly probable that either this week or next week, we come back and at minimum retest value area high. Then as we come over and look at the daily profiles, notice we had a very strong rip at the end of the day. And we talked about that during the live stream. I said, watch out. We're probably going to go ahead and take out the point of control at 56.49.50. Now, one thing I want you guys to focus on is we do have a minus development area within the profile and the fact that we are closing above value. Now, value area high comes in at 56.41.50. The point of control is way down here at 56.13.50. Value area low is down here at 56.09.50. Now, if you're looking to play the rotation on the way down, we need to find additional targets. One, because the point of control is too close near value area low. So I'd either want to target one of these two volume nodes, one being 56.30-ish, the other one down here towards about 56.25. But wait, we've got to talk about this minus development area right here. One, this should act as a magnet, meaning price should come down towards it. And quite often, when the market comes down there and on a smaller time frame, we'll start to see a rejection out of that area. Now, does the market just go sideways around this area? Do we get a bounce all the way back up, taking out the highs from Friday? Or do we bounce up and set a lower high, and then that's what gets the rotation going down on the daily chart? Now, what I will say is if we bounce out of this minus development area, we start coming back up, and then we come into it a second or third time, watch out, we're probably going to flush. And at that point, I would want to heavily be targeting that value area high. Now, this minus development area comes in from about 56.49 down here towards about 56.46. Now, during the live streams, we talk a lot about volume profile, but we also talk about Bookmap. If you guys would like to learn more about Bookmap, check out my beginner's guide to Bookmap right here.